It looks like harvest progress made up some ground this week, and a little insight on candlesticks. From Stewart-Peterson, this is the Market 360 Weekly Grain Update for the week of October 29th, 2018. My name is Chad Goodwill, and today I am joined by Jordan Ham, one of the market advisors on the grain team in Market 360. Well, good morning, Jordan. I'm glad that you're able to join us this week. Thanks so much.
Morning, Chad.
So I wanted to talk a little bit about harvest. I was at an ag banking conference this week in Michigan, and they had talked about how even though soybeans is about 65% in, corn is only about 15% in, and they're feeling like we're pretty behind at this point. What are you seeing nationwide?
Yeah, so we did have a pretty hefty pickup in harvest progress for corn and soybeans last week. Yesterday, actually, the USDA released their crop progress update, and as we can see here, as of October 28th, we were 63% harvested on corn, so actually right on pace with the 5-year average from 2013 to 2017. And then looking at it compared with the week prior to, we were only 49%. So we did move along pretty quickly there.
Wow.
For the corn harvest, and that was just mainly due to guys finally had the time to get out there, the weather permitted, and they took advantage of it. Soybeans too progressed even faster. We're at 72% harvested as of October 28th. That is still behind the average pace, which stands at 81%, but it's a pretty big pickup from where we were last week at 53%.
Okay, wonderful. Well, let's talk a little bit about the weather. I know it's been wet for a while. What have we seen of late?
Yeah, so as the harvest progress report kind of illustrates, we did see much drier weather permit harvest here over the last week and a half, and it looks like we could see a mix of dry and wet going forward. NOAA's latest 8 to 14 day outlook maps are showing kind of neutral temperature probabilities, but a higher than average probability of seeing greater than normal rainfall into the next 2 weeks. So that could slow down harvest, or what's left of bean and corn harvest, and kind of push things into the second week and third week of November even.
Wow. All right. Well, I know when we were talking earlier, you had said that trading has been kind of soft on corn and soybeans over the last week or so. So why don't we move into that? Can you walk us through the charts here with corn and soybeans and let us know what we've seen going on?
Yeah, absolutely. So up until last Friday, it was a pretty disappointing week for corn. We had traded higher early in the week and then sloughed off pretty badly, especially on Thursday. We had a big down day. But the chart that I've got pulled up here is a December corn futures chart, and it's a weekly chart. So each individual candlestick represents 1 week. So the candlestick that I'm on right now is last week. As you can see, we did close a little bit higher than the close from the week prior. Traded in a pretty big range though, down some on Thursday, then up about 7 cents on Friday to give us this nice close. We haven't seen a lot of follow through yet this week. We're kind of trading unchanged. So really, as we're in the midst of harvest here this week and last week as it really picked up, it's just kind of putting corn in a range here while we figure out how big the crop actually is.
Oh, wow.
And as you can see here too, the Bollinger Band that I've got up is showing that we're right at that mid-range point where we're not either really overbought or oversold. We're just kind of right in the middle, waiting for a direction one way or the other.
Okay. Can you go back to that first chart? You had mentioned that a candlestick represents a week. Can you explain to us what a candlestick is?
Yeah, sure. So a candlestick is just one different way of showing or representing the trading that's taking place in a certain period of time. It can be monthly, weekly, daily, all the way down to 30 seconds.
Oh, wow.
So this year, a weekly, we can just kind of illustrate that quickly. Let's take last week's bar, for instance. The bottom here is going to represent where we opened. If it's green, that means we closed higher than the open of that week when we closed the week up. So opened here around 365 and a quarter. Finish at this point here, 368 and a half.
Okay.
And then the highest part of the candlestick, which is right here, that would represent the highest trading price of the week.
Okay.
And likewise, the lowest is the lowest trading price of the week.
Oh, interesting. Okay. And then what about a Bollinger Band? Is there a fun story about Mr. Bollinger and what that
I don't
is?
know if it's necessarily fun, but it does give us a pretty good idea of what extremes are in the market. So when you're looking at the Bollinger Band, the upper Bollinger Band, which we're showing here, is usually going to define your kind of top end of your trading range in that time period. So it's going to be quote unquote tough to trade through that level.
Oh, okay.
Likewise, on the bottom side, if you're hitting this Bollinger Band, it's going to be kind of tougher to trade below that. So it should be support. A lot of times you can extend those Bollinger Bands, so it's not a definitive rule that you have to stay within them.
Okay.
But it does provide a pretty good guide of knowing when you're either entering more of an overbought state or an oversold state, or even really if the market's just wound up tightly and the Bollinger Bands start to really contract and they get small, that's usually a sign that a bigger move is going to be coming.
Oh, fantastic. Okay, so let's transition over then to soybeans. We know that corn was not not an exciting topic. Was there any enthusiasm in soybeans this week?
There was a little bit less enthusiasm in soybeans than corn even yet. So pretty null and void. Soybeans did close lower on the week in pretty disappointing fashion last Friday. Beans were not able to really garner the strength that corn did, or wheat for that matter. So we did close lower on the week. This is the weekly bar from last week, closing right around 845.5 on the November contract, which is going to go off the board here pretty soon, I believe Wednesday actually. So down a little bit on the week, a pretty tight trading range. But as you can see on this weekly Bollinger Band, we're getting closer to the downside, or the quote-unquote support level on the November bean chart. So that would say that maybe we do have some downside that we could still see. The trend right now is probably lower to sideways. And there's not a lot of momentum towards the top side yet.
Wow. Well, gosh, maybe Halloween can scare some activity into the markets for us this week.
Maybe it could. I doubt.
So, talking long term, where do we stand from a long-term trend perspective on corn and soybeans right now?
From a longer-term perspective, we're probably still looking at the bean market being burdened by really heavy supply fundamentals and a weaker demand fundamental too. So it's really got a lot of things working against it. We've got harvest at really full throttle right now. A lot of bushels are going to be hitting the market, and that's going to make it tough for soybeans and corn for that matter to rally. We've got a U.S. dollar that's strengthening. We've also got
tariffs.
Tariffs are obviously the big one that's going to be the cloud hanging over the head of the bean market until something can get figured out with China. And President Trump and President Xi from China will be meeting, hopefully anyways, at the G20 summit in Argentina coming up here at the end of November.
Nice.
Nothing comes out of those talks, though. They're probably looking at imposing more tariffs on Chinese products, which just is going to prolong the process, but at the same time will likely start to cripple their economy to the point where they may need to actually come to the negotiating table.
Oh, my goodness. All right.
So,
something that came up this week is that there are certain pockets of the country that just don't have any more storage capacity for soybeans. From a national perspective, do you feel like we've got a little bit of capacity left for people to put their soybeans somewhere once they get them off the field and then eventually find a market for it? Or is this more widespread than you would think?
I think it's just coming down to we're growing larger crops each year. Genetics are getting better year after year. But the bins that people built to store their crop 10 years ago, they're not going to be able to store their crop that they're producing this year. For instance, as we continue to grow larger crops. So it might be just an infrastructure thing where we're needing to grow our capacity with on-farm storage capabilities. But if we were to bring China back to the market, it's not that there's not enough space for beans. They'll move. So I don't think that's a huge issue going forward. It's just a matter of bringing the demand back and getting them back shipping again.
Good. Well, it sounds like the solution will be coming quickly if we can get this resolved with China, which is good news. Now, what about corn? What's the long-term position on corn?
So for the corn market, it's quite the opposite actually of soybeans in terms of the supply side and the demand side. We've seen a couple weeks of more tepid demand from the corn market. Sales have been on the weaker side of things, but we are still looking at an export pace that's going to meet the USDA expectations.
Oh, good.
So for the corn market, the most bearish fundamental is that it's kind of tied to soybeans right now. Without the imposition of the tariffs earlier on this spring, we'd probably be seeing corn at much higher prices, just given that even with the larger crop that we are growing, the corn market's going to get tighter again this year, less in stocks compared with the demand that we're seeing.
Wow.
So corn's got all the mechanics to rally, but for the time being, it's in a pretty well-defined range between that 380 mark and really the downside being around 340, and we get ping-pong in there for quite a while before we break it. So probably sideways here until we can get through harvest.
Okay. So in closing then, Jordan, what is one thing that farmers should be either paying attention to or thinking about this week?
Really, if you're looking at the board, it's just been pretty boring here the past couple of weeks, so not a whole lot to be paying attention to there. Just getting your ducks in a row for when the rally does take place. That's always the biggest thing, is looking forward, making sure that we've got sales lined up so that when the targets get hit, you're making those sales and following through with them and staying disciplined with those targets. So really, I guess just start some pre-planning for 2019 like we've been talking about. While prices are down at these levels, not a whole lot that you need to be doing other than getting the crop off like you're already doing, and then looking forward.
Sounds good. Well, Jordan, as always, we're very grateful that you're able to take some time to walk us through what's going on in the markets this week, and you have a good day.
All right. Thanks, Chad. You too.
Thanks. Bye-bye. Thank you for joining us for the Market 360 Weekly Grain Update. To access additional resources or learn more about how you may be able to improve your grain marketing, either visit us at Stewart-Peterson.com or give us a call at 800-334-9779. This is a production of Stewart-Peterson Incorporated in beautiful downtown West Bend, Wisconsin.